How's it going, everyone? Tradeism Group here, and today, I'm just gonna be like providing like a breakdown on how my trading day went, and what I did specifically to get my payout request. I just wanted to say, yeah, today is payout day, and basically, I was able to get 5,500 US dollars this time around. Compared to before, I was only at like $2,000 for the payout request. But yeah, it seems like this is gonna be my second payout overall, and hopefully it goes well for me. So yeah, just stay tuned on, like I'm waiting for like that 90% like discount as well for Apex so that I can actually end up buying the 20 accounts and then making 40K every 2 weeks, which is super exciting. Hopefully I get to that point. So for now, like I'm just gonna be like, trading reasonably and trading the markets and, just following like the base hits and using my like overall like highs and lows of the market so that I get the best edge of trading for the day. So as usual, this was the trading day that we were in from 9:30 until 4 p.m., which is the open market. And for my previous video, I actually made like a few trading beginner videos on exactly like what the candles are and like how to like describe those. So you guys can go you can all go check that out. It's just in my like video content somewhere, and basically it's just me having to break down each of like like what the candles are and like like what you're basically seeing from a candle. So you'll be able to get a good read on that. So for now, I'm just gonna like skip that portion and then just like focus on what I usually do for the markets. So as per usual, here's me always having to set up the overnight highs, and then I always go for the overnight lows, looking for the lowest price around overnight, which was 5:15 a.m. And that was at 19,901s. And then as it was getting closer to the market open, that's when I started using the reference levels of the 2000, the 20K 20s, and then basically the low was 19,903s for that specific time. As the market opened, actually, we ended up, having a high right here of like 931s, around 930s here. So, at that point in time, usually like I would draw like probably like a reference level for that point in time, especially like when we get like a big dip like this. When we start like getting a really nice dramatic sell off to the bottom, I like to always draw out that trend line at the top to get a good understanding of like where the market's heading, based on you know um, the price action itself. And as a reference level, basically I'm using the overnight high and the overnight low. And then there's one other point just right down here at 19,843s. If you actually go onto the 30-minute chart, you can actually see like exactly where this was looking to bounce, and it was just right here. There was like actually a support just right around here at 8:30 p.m., which is the overnight low. Um, and yeah, so like this was the overnight low, and then the overnight high was just around here. So basically, this overnight low is actually in play as well, from a few days back around the 26th of June. And they use that as a reference to like bounce off of to get that nice push to the upside. So as per usual, we will take a look at it from this point of view. I'm actually going to take a long position right here, potentially, just because like it's looking really nice and bullish, looking like it wants to go higher. So I'm gonna hold off on that just because like I'm actually explaining the video. For the time being, basically like this was the overnight low from a few days ago. We actually broke right below that, and then we started trending. We started basing out right here. I actually put this in my Discord of exactly what I saw and what was going on. I was kind of expecting reversal at this point somewhere. It was kind of very choppy, so I was kind of like concerned about even getting into a position. So most of this right here in the morning from 9:30 until like 10 o'clock, I didn't really touch this much. I didn't really touch this this part of the level because it was like making these big swings out of nowhere, about 20 to 40, 20 to 30 points per candle. We were pretending to break up here, a nice fake breakout, and then we started pushing lower. I thought this would be even like a nice support, but it didn't. I kept on holding off on it because like I knew there was something up around this price, and luckily I was right, because like around this point there's no proper supports. There's no proper supports. There's no proper like resistance levels being made. So you would have been getting chopped up very quickly within this trend and probably blowing up an account. Luckily, I didn't touch that as much. And then as it got lower to this price over here, you can see this three soldier candle setup. I actually ended up taking a long here because, you know, usually like for this stuff, like when I see 3 candles like this, it means that like the sellers are kind of like losing the momentum, and you can actually see the higher low, the higher low, the higher low, the lower high, the lower high. No, the higher. Okay, so the higher high, higher high, higher high, higher low, higher low, higher low on the wicks. And then I usually like to use that as an indicator as well that this market actually could potentially push to the upside. So I went long right there, took a nice 10-point scalp, didn't really see much to it, and then it sold off. And this is also like considered as it's called PMG bearish candle setup as well. That's the specific pattern that I know about this. And I don't really like follow the patterns that much, to be honest. Like they rarely kind of like work out. And sometimes it'll fool you more than it'll actually help you. But this is technically called the PMG bearish setup, where we have like 3 candles, we overtake the buyers really quickly, and then afterwards we're able to put a short right at this price, maybe even over here. We can actually put a short here and here, and then afterwards cover right into this support level on the overnight low, which is to our left. Or you could have actually just held it right through. If it broke through these 2 levels, then that would have been a proper for example, you'd be able to take a short right here, set a stop loss here, set a stop loss here. As each candle closes of the 1 minute, you can actually set a candle right at the top here. When this closes down and then this starts trying to push back up, but then it pushes harder down, you put the candle here, and then moving forward, this is how it works. So basically, you set your stop at the wick here at the top. Usually it depends on like where your entry is as well. If you have a good entry like right over around here at this breakout point, then yes, putting a stop loss right here and only risking about like 5 points, it's not that bad. And then as the price starts dropping, you want to actually move your stop loss gradually with the trend. And this was like a strong selling trend. But at the end of the day, like you can see that there's a bounce here from like the support from a few days from June 26th. We broke below that, but this right here was an indicator itself that buyers were interested around this value. So if we actually push down here and then like we were getting like a nice recovery of some sort, like a bounce, then I would use this as a reference point to get out as a resistance, or I can actually just like start pushing my stop loss above as well. So as you can see right here, we got a nice pop. We kind of like had a bullish candle over top of this. This sellers tried to push it down. They couldn't push it below this value of 19,842.75s. And then as you can see, we got the 3 soldier candle concepts again. And then this time it actually pushed to the upside. And as you can see over here, that could have been the same thing. I like that this one kind of curled more like this, like an exponential curve, as opposed to like, an exponential parabolic curve to the downside, like a parabolic, So this one kind of like, was also an indicator that it was kind of like curling to the downside more. This one was kind of curling to the upside, like an exponential pattern. And, as another reference point, the volume at this level here was about flat at 3661s. And the volume over here was also starting to get flat as well, which means that there was a nice conversion of volume. So as you can see, the volume, as it was getting closer to the low, from 930 all the way down to 943, we can see that the volume was kind of fading out. As it was selling off, the volume was increasing and increasing and increasing. And then gradually right around here, we kind of flattened out a little bit, and then we started increasing in volume again. So either, the buyers are actually scaling in their position just from this point on right here, around 19,895s all the way down. And then as you can see on the next set, the volume dies out, which means that the sellers were not interested anymore at shorting this price. That means there was no liquidity left to grab around this price. And then as you can see, the cumulative delta slowly stacking to the upside. I actually use that as an indicator that this right here is more of a little bit of a bullish move, which I indicated in the Discord, which is completely free if you guys want to join. It's going to be in the link, of course. It's just down in the description, so feel free to check that out. I already got like a few people that joined, and the community is nice. At the end of the day, like we're just a free Discord. We're not like looking to, I'm not looking to take profits from you guys or anything like that. But I like the only thing that I would appreciate is probably just like using my reference code or like the Apex code if you ever do consider like buying the courses. That'll help me out a lot. But other than that, I don't want to like charge anybody for the group and such, because I feel like that's like it's a nice business role model, of course, but can't always be too greedy, right? Um, but yeah, so basically around here, it pushes up to the upside. We get a nice little resistance at this point. That's why it broke right through. But if it broke right through, then we got to this level. This could have been a nice short around here, but as you can see, this candle tried to sell off. It held really hard, and then basically we just pumped. Around here, this was the 10 a.m. news. We actually had news right here. This could easily push down because of the news, so it would have been better to get out before the news, which some people did. It pushed above it. We got into this liquidity range where the buyers were originally trapped at this price. Uh, we had like small buyers basically trapped at this price. The volume wasn't really that high, and like they basically just scaled their position in. And then as they scaled their position in, because the volume is increasing, they basically at this point, like, they have a good average around this level. The buyers will eventually sell at this value to break even for their trades at the top here, and also profit from the trades from the bottom down here. That's how the concept works. Basically, buyers at this price were just like the initial starting, and then basically they started scaling in a little bit harder around here near the support, and then they were able to break even for these guys, like these points, this price action right here. They were able to break even, so that's why they were selling here, and then they just decided to sell their entire position, just because like they didn't know whether the direction of the market was going to continue downside. As you can see right here, short sellers took advantage of that. This one pushed very quickly from 1920s to 1990s. That's about 30 points in about a minute, 35 points in a minute, which is fairly strong. I would have probably like took a short off of this, and for to cover at the support, which is right here. So I would have used this as a reference to basically exit my trade, because I prefer to see like double bottoms before any push up to the upside, like any kind of reversal. And as you can see, buyers try to get in. They pushed below. They actually stopped out all of the longs that were in here originally, and then afterwards, the institutions decided to swing it back up right after, and then all the people that got stopped out, they used them as liquidity for that trade. So and then over here, you can also see that this was actually going on the downside. This was the cumulative delta, and it was showing that there was a divergence at this price. So there was kind of like an idea of reversal for here. So all the longs got stopped out, and then on top of that, we actually had a nice delta convergence, which means that they were interested in adding more contracts around this price to the long side, which they did. It bounced right back up to this level at 19,930s, and then from there moving forward, the market just kept on trending up for the remainder of the day. So this was kind of similar to like one of the days, like a few days back before the rally. This was kind of like a bull rally near the end of the day here, and then basically we could use this as a reference point right there. As you can see, like the June 26th support right here, it actually bounced right off of it, came back up, came back down, did the same thing right here, exactly the same way, trapped them. Basically all the longs that were right here just accumulated, basically stopped them out, because they're trailing their stop, right? So their intentions are to trail the stop. So they're basically right after, like they're trailing their stop per candle or something like that. They were letting it run. It got to this price again. It started selling off because maybe there's still the longs holding at this price. They resold it, and then they pushed the stop loss when it bounced really hard there. And then from there, the short sellers stopped them out, took all their liquidity, and then we pushed to the upside again. So that's the idea that we had behind here with this trade. Of course, I also indicated that if we were to break this trend line, we would get a nice sell-off. Perhaps I was anticipating like around 19,905 because of the selling and how large the swings were. I was kind of expecting it to come back down into like into the range, but it never did that. We actually went to this point of 20,020s, and then afterwards we did a reversal. We broke the trend line, and then right here taking a short would have been nice from 20,017s maybe down to 19,985. So that's about like 30 points in total, and then we continue to use that as a support reference. This right here is the, I don't know where the hell that came from. Not gonna lie. Oh yeah, that was the open market price. So from 930, that was the high of the open market at the time, and then they used that as a level of resistance, basically. and just kept bouncing between this range here. And now the overnight market is looking like that. I think that we could potentially break below here and then come down to the support that I was expecting around 19,904.50s overnight. Or we can actually just maintain this level at 19,980.25s. But yeah, basically, you know, with everything that happened, yeah, like if any of you have any questions, feel free to like the video, subscribe, and leave a comment. If there was any like different kind of content that you want to see, and yeah, I'm just gonna leave a bunch of like my links in there, and you're more than welcome to use it, not use it. It's completely up to you. But you know, I would prefer if you guys used it. That would help me out a ton. So, but in any case, yeah. And just to show us some proof, basically that I got paid out. So this is like the proof that I have. That you know, I traded for 10 days and basically like, you know, took 2000 and 1500 from there off the accounts. So yeah, in any case, yeah, if y'all have any other questions, just feel free to just let me know. Thank you. Thanks for watching. Have a good one. Bye.